We made a mistake, and one mistake can change your life.
It was an $800,000 mistake. Jerry and Mindy Dunaway got caught up in a cryptocurrency scam. It started in late March when Jerry was contacted by a person through WhatsApp about investing in cryptocurrency.
Grab a chair and settle in, because you are not going to believe what banks are up to right now. You remember when going to the bank meant chatting with Doris the teller? Well, those days are completely dead. Banks have finally realized scammers are treating our beloved seniors like walking automated teller machines. Instead of warnings, banks are dropping the ban hammer on everyday features. Today, we are counting down the reasons why banks are banning seniors. Number 1 is shocking, but let's start with something most seniors don't know about cryptocurrency. Number 10, the sudden cryptocurrency wire blockade. Let us talk about cryptocurrency. Yes, the invisible internet money that sounds like a video game currency, but somehow costs $60,000 a coin. Historically, seniors and cryptocurrency have mixed about as well as oil and water, or me and morning yoga. But suddenly, banks started noticing a terrifying trend. Sweet 82-year-old grandmothers who still write checks at the grocery store were suddenly logging into their accounts and trying to wire $10,000 to overseas crypto exchanges. Was Grandma suddenly diversifying her portfolio into blockchain assets because she read a financial blog? No. Grandma was on the phone with a scammer named Kevin, who told her that she owed back taxes from 20 years ago, and the only way to avoid federal prison was to buy Bitcoin. So what are the banks doing? They are dropping a massive ban on these crypto transactions. They are placing incredibly strict, unyielding blocks on outbound cryptocurrency transfers for older accounts. If an account holder over a certain age suddenly tries to link their checking account to a crypto exchange, the bank throws up a digital brick wall. The transaction does not just pend, it is killed on site. Banks are no longer taking the "it is their money" approach. They are acting like bouncers at an exclusive club. If a senior tries to buy crypto, the bank essentially says, "Not on my watch. Go buy some savings bonds and call your grandson." It is a massive restriction, and while it is saving millions of dollars, it is also making seniors furious. If you think stopping crypto is wild, wait until you hear what they are doing to family members in number 9. That one gets personal. Number 9, the napkin power of attorney ban. You see, establishing a power of attorney used to mean you just printed a generic form off the internet, signed it at the kitchen table, maybe had your neighbor Gary witness it while he was borrowing your lawnmower, and handed it to the bank teller. The teller would glance at it, say it looks good, and suddenly your nephew Chad had full access to your life savings. Those days are over, dead and buried. And we have said it before, Chad is an idiot. We all know Chad. Chad has a startup idea every 3 weeks and drives a car with a spoiler bigger than his credit score. The banks know Chad too, and they are terrified of him. Financial elder abuse by family members is one of the darkest, most common forms of theft in the world. So, banks are cracking down so hard on power of attorney documents that you would think you were applying for top-secret security clearance at the Pentagon. They are effectively banning informal, non-standard documents. If you walk into a bank today with a piece of paper you downloaded from a free legal website, the bank manager is going to look at you like you just handed them a drawing of a cat and ask to withdraw $1 million. The banks are now putting restrictions on what the agent can actually do. They are banning broad, sweeping powers unless they are rigorously justified. If Chad tries to log in and wire $50,000 to his new artisan shoelace business, the bank's algorithm flags it. They freeze the account, and they call the senior directly. And if the senior sounds confused, the bank cancels the transaction entirely. One woman named Linda tried to make her daughter her agent just for convenience while Linda was on a cruise. The bank made them sit through a 45-minute interview. They separated them, like it was a police interrogation. They put Linda in a glass office and basically asked her to blink twice if her daughter was coercing her to buy a timeshare. Linda was so insulted she almost hit the banker with her purse. But as annoying as it is, this ban on easy access is stopping the Chads of the world from treating their parents' retirement funds like a personal piggy bank. Chad's antics are nothing compared to the romance scam disaster we will uncover in number 5. You are going to howl at that one. Number 8. The screen share software freeze. Have you ever tried to help your parents fix their computer? It usually involves you shouting into the phone, "No, Dad, close that window." Not the physical window in the living room, the browser window. It is a total nightmare. Well, scammers figured out that instead of shouting, they could just ask seniors to download an app that lets the scammer see their computer screen. It is called remote access software, and it has been the weapon of choice for fake tech support scammers for years. A scammer tells Grandpa to log into his bank account to pay for a repair. Grandpa logs in. The scammer blackens Grandpa's screen, uses his active login to transfer $10,000 out of the account, and vanishes. It was a brilliant, evil trick. But you are going to love what the banks did to combat this. They banned it. How do you ban someone using their own computer? Modern banking apps are now equipped with anti-screen sharing technology. If you are on your smartphone or your computer, and you have a screen sharing application running in the background, the banking app will literally refuse to open. It drops a massive black screen that says remote access is detected and the app is locked. It is a total, uncompromising ban. There are recordings of scammers trying to pull this off. The scammer had a sweet older lady on the phone, telling her to open the bank app. The lady said it would not open because of the screen share. The scammer started panicking, claiming it was a virus blocking it. The lady calmly told him that the bank says he is a liar and her casserole is burning. Goodbye. The banks have essentially weaponized their own apps to snitch on the scammers. By banning access while screen sharing is active, they have cut off the oxygen to the fake tech support industry. If you are learning how to defend your retirement fund from these absolute lunatics, hit the subscribe button right now and join our community. But if you think screen share fraud is terrifying, wait until you find out how fast your own bank app can be used against you in number 7. Number 7. The high-velocity peer-to-peer transfer ban. You remember when paying a friend meant writing a check or handing them a crisp $20 bill? Now, if you owe someone money, they just tell you to use an app on your phone. These peer-to-peer apps are amazing for splitting a pizza, but they are a massive disaster when it comes to financial fraud. The moment you hit send, that money has gone faster than motivation to go to the gym on a Monday. Scammers love these apps. They will call a senior, claim to be from the fraud department, and say someone is trying to steal their money. To protect it, they tell the senior to send their entire balance to a safe government account right now. And because seniors trust authority figures, they do it. So, what did the banks do? You guessed it. A massive, sweeping ban on unverified, high-velocity transfers for older, vulnerable accounts. The bank had instituted a strict policy. Any sudden, large transfer to a brand new contact from a senior account triggers an automatic ban until the account holder proves they are not being scammed. But if you think sending money online is hard, wait until you see the interrogation you get for just wanting your own physical cash in number 6. Number 6. The unexplained cash withdrawal inquisition. Imagine you have $50,000 sitting in a savings account. It is your money. You earned it. You decide you want to withdraw $10,000 in physical, crisp cash. Maybe you want to stuff it under your mattress. Maybe you want to roll around in it. It is yours. You walk into the bank, hand the teller your withdrawal slip, and smile. 10 years ago, the teller would have asked how you wanted your bills. Today, the teller looks at the slip, presses a silent button under the desk, and suddenly you are ushered into a back office with a manager named Brenda who looks at you like a psychiatrist evaluating a patient. Banks are practically banning unexplained large cash withdrawals for seniors. Why? Because of the grandparent scam. Scammers call seniors pretending to be their grandson or a police officer, crying on the phone that they are in jail and need $10,000 cash right now. The terrified grandparent rushes to the bank to pull out the cash to hand to a courier the scammer sends to their house. To stop this, banks have implemented the Inquisition. If a senior asks for a large sum of cash, the bank tellers are legally obligated to grill them. What is this money for? Are you giving this to a courier? Did someone call you and tell you not to tell your family? Picture a man named Frank standing in line at the bank, who just wanted $7,000 to pay a contractor to fix his roof. The teller started the interrogation. When asked why he needed the cash, Frank, who had zero patience, said he wanted to build a fort out of $100 bills in his living room. The teller did not laugh. The manager came out and refused to release the funds until they verified Frank was not being coerced. Frank yelled that he was being coerced by his wife, who threatened to lock him out if he did not fix the roof. It took Frank 30 minutes and a phone call to his wife to get his money. The banks are outright refusing to hand over large stacks of cash if the senior cannot provide a verified reason. It feels intrusive, but the friction is the point. By banning immediate cash withdrawals, the bank forces the senior to pause, breathe, and explain the situation out loud. And usually, when you explain a scam out loud, you realize how absurd it sounds. Speaking of cash, you will not believe what they are banning over in number 5. But first, let us talk about love, the fraudulent one. Number 5. The overseas romance wire ban. Oh, the romance scam. This one breaks our hearts, but it also makes us want to scream into a pillow. Lonely seniors often turn to the internet for companionship. They join Facebook or dating websites, and suddenly they are messaged by a remarkably handsome man who claims to be a 4-star general currently stationed on a highly classified submarine off the coast of somewhere exotic. This general falls madly in love with the senior over the course of 3 weeks. They exchange poetry, they talk about their future together, and then tragedy strikes. The general's submarine breaks down, and the military refuses to pay for the parts. The general desperately needs the senior to wire him $15,000 so he can fix the submarine and finally fly home to marry her. And we have said it before. The military does not ask civilians to crowdfund submarine repairs. But love is blind, and love makes people do ridiculous things. Seniors were marching into banks and demanding international wire transfers to completely unverified accounts in countries they could not point to on a map. So, the bank stepped in and dropped a massive ban on sudden large international wire transfers to unverified recipients, especially when the account history shows no prior international activity. If an 80-year-old widow who has never left Ohio suddenly tries to wire $20,000 to a bank in Nigeria or Turkey, the system shuts it down immediately. The bank freezes the wire, they call the customer into the branch, and they sit them down and literally explain the mechanics of a romance scam. Bankers are practically acting as relationship counselors in 2026. They have to look these sweet ladies in the eye and say, "Ma'am, General Handsome is not real. He is a 20-year-old kid in a cyber cafe and he is..."
Scams are still running rampant across the country. One woman says she was taken in by the so-called romance scam. 56,000 people fell victim to it last year alone.
It is an incredibly difficult conversation, and often the seniors get angry and defensive because they believe they are truly in love. Have you ever been messaged by a fake general or a rogue oil rig worker on Facebook? Drop a comment below with their ridiculous fake names so we can all laugh about it. The banks are taking the heat, absorbing the anger, and refusing to process the wires. They are banning the transaction to protect the heart and the wallet. Number 4. The massive gift card purchase blockade. If you want to see a bank algorithm lose its absolute mind, try using your debit card to buy $4,000 worth of Apple iTunes gift cards at a local pharmacy. Scammers love gift cards because they are entirely untraceable. They are the digital equivalent of unmarked non-sequential bills in a briefcase. A scammer will call a senior, claim to be from the Internal Revenue Service, and say the senior owes $5,000 in back taxes. But instead of asking for a check, the fake agent says the government now accepts payment in the form of Target or Apple gift cards. Just pause and think about that. The federal government, the most powerful institution on the planet, allegedly wants you to pay your taxes so they can buy extra lives in Candy Crush. It is absurd. But in a panic, people do not think clearly. They rush to the grocery store, grab 50 gift cards off the rack, and swipe their debit card. The banks have finally said enough. They are implementing strict bans on high-volume gift card purchases at retail locations. If your debit card suddenly attempts to process a massive charge at a pharmacy or a big box store, and the merchant category code indicates it is a gift card activation, the bank declines the card. They ban the purchase on the spot. You will be standing at the register, surrounded by 50 pieces of plastic, and your card will decline. You have to call the fraud department, and they will explicitly ask you, "Did someone on the phone tell you to buy these cards to pay a fine?" The scammers know this is happening, which is why they now tell victims to buy the cards in smaller batches of $200 at 5 different stores. But the banks are getting smarter, tracking the velocity of the purchases and banning the card after the second or third store. It is a game of cat and mouse, but the banks are finally putting up a fight. Gift cards are bad, but changing your entire life's legacy online is vastly worse. We tackle that nightmare in number 3. Number 3. Sudden online beneficiary changes. You remember the days when changing the beneficiary on your bank account or your retirement fund meant making an appointment, sitting down with a financial advisor, proving your identity with a driver's license, and signing actual physical paperwork in triplicate? Then the internet came along, and banks decided it would be wonderfully convenient if you could just log into your portal and change who gets your life savings with 3 clicks of a mouse. What could possibly go wrong? Everything. Everything went wrong. You see, scammers, and sometimes incredibly shady new acquaintances, realized how easy this was. An elderly person might get a new best friend who just moved in next door, This new friend is so helpful. They help with the groceries, they help with the computer, and oh look, they just helped log into the banking portal and accidentally changed the primary beneficiary from the senior's actual children to the new best friend. Or a cybercriminal gains access to the account through a phishing email. They do not even bother trying to wire the money out today. They just quietly change the beneficiary to a synthetic identity they control, knowing that when the senior passes away, the money will automatically route to them, completely bypassing probate court. Banks have recognized this massive vulnerability and are dropping a ban on sudden, unverified online beneficiary changes for senior accounts. In 2026, if an account holder over a certain age tries to log in and remove their children as beneficiaries to add a completely unknown third party, the bank stops the process. The online feature is effectively banned. The system forces the account holder to complete the change in person, at a physical branch, or through a heavily authenticated video call with a fraud specialist. They ask questions. Who is this new person? How long have you known them? Are they in the room with you right now? It is causing a lot of grumbling from seniors who just want to leave $10,000 to their favorite local charity without jumping through hoops. But the banks are holding the line. They are banning the convenience to ensure that your actual family does not get entirely disinherited by a hacker named Steve who lives in a different time zone. If you think changing a name is scary, wait until you see how they are weaponizing the very text messages your bank sends you in number 2. Number 2, the one-time passcode phone relay ban. This scam is so brilliant it actually makes us angry. It uses the bank's own security measures against the customer. When you log into your bank, or when you try to authorize a new device, the bank sends a 6-digit one-time passcode to your mobile phone via text message. The message always says, "Do not share this code with anyone. We will never ask for this code." But what do people do? They share the code. A scammer will call a senior, spoofing the caller ID so it perfectly says the name of the bank. The scammer says that this is the fraud department, there is a suspicious charge of $800 on your account, and to verify your identity so they can cancel the charge, they are going to send a 6-digit code to your phone. Please read it back. The senior panics. They want to stop the fake charge. The text message arrives. They ignore the giant warning that says, "Do not share this code," and they read the 6 numbers to the scammer. The scammer uses that code to log into the senior's account on their own computer, provision a digital wallet, or authorize a massive wire transfer. The banks are so exhausted by this that they are implementing behavioral biometric bans. They are utilizing artificial intelligence to detect if a customer is on a live phone call while simultaneously requesting a security code. If the banking app detects an active, unverified voice call occurring at the exact same moment a high-risk transaction is attempted, the app bans the generation of the code. The app will literally refuse to send the text message. It will display a warning. Active phone call detected. We will not send a security code while you are on the phone. Scammers hate this. They try to tell the senior to put the phone on speaker or hang up, get the code, and call them back. But the friction shatters the illusion. The ban on simultaneous communication and code generation is a massive technological leap. The banks are basically saying, since you will not read the warning label, we are taking the code away until you hang up the phone. It is tough love. It is patronizing, but it is necessary to stop the bleeding. If you are enjoying this brutal honesty and learning how to protect your family, share this video with anyone who has a bank account. We have to spread the word. Now prepare yourself for the final, most historic ban on our list. Number 1, the automated check cashing freeze. We have reached the top of the mountain. Number 1, the granddaddy of all financial scams, and the ultimate ban the banks have finally dropped on seniors. We are talking about the classic fake check scam. This scam has been around since the invention of paper. A senior receives a letter in the mail. It says they have won the Jamaican lottery, or a publisher's sweepstakes, or they have been selected as a mystery shopper. Enclosed in the letter is a beautiful, very real-looking cashier's check for $5,000. The letter instructs the senior to deposit the check into their bank account. Then, they are told to keep $1,000 as their prize and immediately wire the remaining $4,000 to a tax agent or a customs official to cover the processing fees for their massive grand prize. The senior goes to the ATM, deposits the check, and sees the funds appear in their available balance the very next morning. They think the check cleared, so they wire the $4,000 out of their account to the scammer. And we have said it before. Federal law requires banks to make deposited funds available quickly. before the check actually clears the incredibly slow, archaic paper clearing system. 3 weeks later, the bank realizes the check is a complete counterfeit. They reverse the $5,000 deposit. The senior's account goes massively negative, and the $4,000 they wired out is gone forever. It is their own money they lost. To combat this absolute devastation, banks have instituted a sweeping ban on automated, rapid check availability for large, suspicious checks deposited by older accounts. If an 80-year-old who usually only deposits a monthly pension suddenly deposits a cashier's check for $10,000 from an out-of-state bank using a mobile phone camera or an ATM, the bank slams the brakes. They ban the immediate availability of the funds. They place an extended, agonizing freeze on the deposit. They will hold that money for 5, 10, or even 15 days while their back-office investigators scrutinize the paper, verify the routing numbers, and contact the issuing institution. Seniors are furious about this. They complain that the bank is holding their money hostage. They yell at the tellers. They threaten to close their accounts because they have to wait 2 weeks for a check to clear. But the bank's response is simple. We are not holding your money hostage. We are preventing you from sending your actual cash to a criminal while we verify a piece of paper. By banning the speed of the transaction, the bank neutralizes the entire scam. When the scammer calls demanding the tax payment, the senior simply says, "I cannot send it." The bank froze the check. The scammer eventually gives up and moves on. And that, right there, is the whole point. The banks have finally accepted that speed is the enemy. The friction is the protection. Every delay, every inquisition, every block transfer is another senior not losing their life savings to a 20-year-old criminal in a basement somewhere. Banks are changing the rules fast, and most people have no idea until it is too late. Now you know all 10. Click the video on your left about the 5 biggest financial scams targeting families right now. I will see you there.